What do you think? Are you a good investor or are you a bad investor? And actually, do you have any objective way how you could measure your success and performance as an investor? Yes, it might sound dry, but it's actually extremely important to understand what type of investor are you, what you can do in markets, what you cannot do in markets, and actually what are your realistic capabilities. So let's dig into fundamentals of investing and understand what are the approaches to financial markets. The legend Benjamin Graham, in his famous landmark work Intelligent Investor, defined investors into two categories: active investors and passive investors. In other words, active investor is the investor who makes market research himself and constructs his own securities portfolio. For the most part, these are either stocks or bonds. And passive investor is the one who doesn't have time or energy to do that, and he is simply passively investing in securities, which will give him, I would say, rather predictable yet boring results. So this could be alternative to bank deposit or something like that, where you are simply parking your money and don't do anything else. By any kind of logic, you would say that active investors should make way more money because he actively invests in best companies, so naturally he has to make more money, right? But here's the truth. In theory, best investors indeed are active investors because they are able to find best stocks or best investments for them. But in practice, in like 95 cases out of 100, actually passive investors are ones who are making most money rather than active ones, because active investors are getting this wrong and they are actually losing money rather than making money in financial markets. And this is one of the paradoxes of investing. The fact that you are putting more time, more effort, or more money in your research doesn't mean you will make more money. So for now, let's simply see what active investors do. Firstly, as an active investor, you have to understand what's your investing strategy, what you stand to make, and how you could actually analyze markets. Let's see stock market. If you are investing in stocks as an active investor, what's your investing strategy? Are you making investments in undervalued companies, potential growth companies, stable companies with high dividend payouts, or something else? You have to see whether your approach actually works and brings money. To simplify things, if you buy undervalued securities, in a nutshell, that means you have to have quantifiable, objectively measurable system which says that you could find companies which are traded at values which are significantly below their actual value. It's not simply buying companies with low price to earnings ratio and good returns on equity, because everyone in the world could see this in 5 minutes. You have to have slightly more complex system, and you have to understand that there are thousands and thousands of professional traders with billions in their resources which are doing exactly the same thing. So there have to be some angles how you actually could see that. But fortunately, markets are quite irrational from time to time, and they might give you absurd valuations which gives you opportunities. So first things first, dig into your strategy, see its historical performance, see its results, and see actually whether you stand a chance. So what is passive investing opposed to active investing? If you have the same example of stock investing, passive investing strategy will be simply following stock market indices. So that means you're not trying to beat stock market indices such as S&P 500. You're simply buying S&P 500 and mimic the return. Remember, as I told you before at the beginning of video, it's simply as buying bank deposit and waiting for expected return. So if we are going into bank deposit, we could make like 2% per year, but if we are buying stock market indices, we have expectation that in the long term we could make 10% per year. Sometimes we will have loss, sometimes we will have huge profit, but at 10-15 year time period it will even out. That's the approach. And we invest each month or each quarter fixed sum of money, avoid any market timing, and that's the simple approach. And effectively it works. It requires patience, and from some time people might get excited to invest in their own. They start to time the market or simply get bored or forget about it. That's another thing, but in theory this is the approach that works the best. So actually there is nothing much to say about it, but there are nuances. There are nuances like which ETFs to buy, what are the investing costs, and other technical questions, so forth and so on, which are more critical than investing strategy itself. But in simple words, you understood what the idea was. Simply buy up, whether this is S&P 500 index, whether this is Nasdaq index, whether this is index that tracks global stocks or something like that, and forget about anything else and simply plan that you will make some expected return, which happened in the last 10 or 20 years. How actually could compare these strategies? As I told you before, the best returns are from ones which are making active investing. But as I told you, you have to have good quantifiable strategy that has real chance of making actual money. It's actually pretty easy to have stock portfolio which will have similar results as general stock market indices. That's easy to do. But to have strategy which has significantly better results, that's actually a pretty hard thing to do if you don't want to have way more risk. So have a good strategy, good approach, and have your individual angle how you could actually, I would say, outperform professional investors and do not play their game. Because if you invest like professional investors do, you wouldn't beat them. You will be way better off with passive investing strategies. And in passive investing strategies, you simply have to understand whether you will invest in bonds, commodities, stock markets, or diversify across them and simply invest there, choose the best ETFs, and forget about everything else. So, whether you want to make money as an active or passive investor, you will see lots of important nuances and good information that will help you tremendously in your investing journey. So let's see next videos and see how you could actually make money in these ways.